If you're new here, I'm Travis, full-time swing trader that's taken my account from $150,000 to a little over $1 million in the last 3 years. I'm now sharing my entire strategy, daily routine, positions, stops, and targets in real time. Each week, I take you through every position I'm holding and walk you through the technical analysis, my exact positions, stop loss, and profit targets. That's exactly what I'll be doing in this video. And throughout the week, I share my trades and how I'm managing these positions in real time. But this video is important for understanding the logic and reasoning behind each trade. If you find value in this, please hit the like button and be sure to subscribe to get notified each day when I share my real-time trading. Now, let's get into my positions. Okay, gang, the first thing you'll notice when I'm logged in here is I am connected to my Interactive Brokers account. You're going to see my position, stop loss, and any profit target I have in place. You'll also sometimes see my execution marks. If these were recent, they're on the chart. If not, Interactive Brokers tends to not show them any longer. So they're usually there, but not always. In this particular position, this is TECK, Teck Resources. I took this trade in real time on a video on my YouTube channel on Wednesday, the 24th. You can see all my buys here. So we're buying this pullback in what is a very clear uptrend. Now remember, I'm a moving averages kind of guy. I watch these, I look for places of support and resistance, and this just seems like a logical place to start getting long. If you want to see that in action, check out Wednesday's video. But what we're looking at here in general is a stock that has come through its 200-day moving average, found support, and is breaking above a very clear resistance line. Notice this was support here, here, kind of in this zone, here again, and then we finally fell through here, and it turned into resistance. Boom, boom, here. And then we had a kind of push-pull through this zone recently. Now we can feel like we're confidently in a strong uptrend, and we want to be long. So what I did is zoom down into the 15-minute. We waited for our entry. We snagged it against this 45, 50-ish zone, and it moved in our favor very quickly. And the only problem here is we wanted 4,000 shares. We didn't get them. So we're happy with 2,000. And at this point, since the position is a little bit smaller for us, we're going to trail our stop loss. And as long as this keeps moving up, we're going to lock in those gains and keep locking in those gains. But our original stop loss was somewhere down here at the 44 mark. And again, you can see that in Wednesday's video. Highly suggest you take a look if you want to see this trade develop in real time. So we're going to stay with Teck and hopefully keep moving up that trailing stop, locking in gains. Next is Roku. I've had this position on for several weeks. The idea here was to hopefully break through this long multi-year base. And if we can get through here, we should see it go much higher. Now, Roku is one of those COVID darlings that just had an exceptional run and then a fall from grace and has bottomed, hopefully bottomed here in the last few years. Earnings have been expanding and doing well, and we just need to push up through this earnings high a little bit more here in the 116 zone. If we can do that, I have plans to take off half the position at around 125.60. The point of me taking partial profits is that I eliminate my risk. You can see my risk at this point is very small, but I want to eliminate it further and pay myself something. I have a family, I have bills. I do this for a living, so I want to take some off, put it in the bank, and also free up capital for new ideas. Because for me, it's about finding the next trade, adding inventory, and letting the winners continue to run without having all of my eggs in that basket. It's just the way I trade. Next up is ALB. It has been a phenomenal trend for us. Initially identified this one back in September and rode it for a little bit, but didn't get this full move. I've recently entered again. You can see my 1,000 shares. Actually, I had 2,000 shares purchased. We took partial profits. Unfortunately, these executions are not on the chart here, but we took partial profits and now we've been trailing the rest. I've got a very tight stop loss on this now because I just don't want to give up much gains if this reverses. You can see we're pulling away from the 10 and 20 exponential moving averages, and we're very far from the 50. Now, if I pull this up on my chart that shows expansion from the 200 period moving average, and this will be on the daily, you can see how extended this really is. In the lower pane here, you have the percentage that price is away from the 200 period moving average. In this case, we're about 60% higher than the current 200-day moving average. And historically, that's pretty stretched. We saw a period here in August 2021 and ended up in some chop and then kind of a big down move. And we had a greater expansion here up to almost 80% in January, February 2021 and had a pullback. So this isn't a reason to sell in my mind, but it is a reason to keep that stop loss a little tighter than we normally would. I usually would be kind of trailing here the 20 exponential moving average. But since this is getting so stretched from the 200 and other moving averages, I want to make sure that I am not giving back too much profit if this does reverse on us. So we're just playing it a little closer to the vest. But overall, I love the trend here. That said, I probably wouldn't be getting involved at this point. Merck is another one I like. The healthcare space has been very, very strong, and we can see that from the XLV sector. Remember, I like to look at sector strength and then drill down to individual names to find the stocks that I really want to be involved in. So XLV has been in a very strong uptrend, and Merck is part of that sector and is now making new local highs. Now, there was huge volume here back on December 19th when the US government made some deals with the drug companies about lowering drug prices. I don't know all the details, but I do know that it removed some uncertainty around these drug suppliers or these names like Merck or AbbVie, Eli Lilly, etc. And what we saw with Merck here after coming through the 200-day moving average is just a nice push higher, correction, and another move higher. We got involved back on December 22nd. I took partial profits of 1,000 shares. So we had 3,000 shares, took profits on a third of that, and we're letting the rest kind of trail at this point. So this is a name I would look to potentially add to, but again, we're starting to get stretched here. I'd like to see a little more consolidation at this point. Zoom is another COVID darling that had a massive, massive fall from grace. Again, like Roku, earnings have been improving, and we've gone through this multi-year basing structure. So if we can push up and out of this, it should have a lot of potential to move higher. This is one I've stayed patient with, but again, I'm protecting the downside with a stop loss. I'm not giving it a ton of room to breathe. And to be honest, the 15-minute chart looks a little bit weak here. I'd like to see this start rolling up and getting through these highs. So I'm not adding here. I probably wouldn't initiate a position here until we get something more like what we saw down here, above the 200 period moving average on the 15-minute chart, some consolidation, and then we're pushing higher. It had potential to do that here last week and kind of failed. So that's a little bit of a warning sign, but I still think it has the potential to recover. And I'll be calling this out next week in our videos if it does improve. SHLS is Shoals Technologies Group. It's a solar related name that we were in initially when it made this big move on the daily chart up here and then corrected a lot along with many of the other solar names and has consolidated and looks to potentially be moving up and out. We've had some really strong consolidation here the last 3 trading days. It's smaller and smaller daily ranges in terms of price and lower volume. Now, how much of this was attributed to the holiday week and in terms of the low volume, it's hard to say, but it definitely had an impact. So I'm waiting to see what happens this week and if we can move out of this basing structure. That said, this is still very close to my entry point. You'll see I did buy these shares, 20,000 at an average price of $9.18. So why are we showing a price up here at $9.40? It's because I was in this name earlier within a 30-day window, and this is adjusting higher for wash sale potential. It's just a technicality with our broker, and this is the cost basis if I had never sold that position. So this current position is averaged at 918, right around where we're currently trading. So this is one I still like if you aren't involved. Again, this isn't financial advice, but it's very close to my entry, and my stop is down here at an 875. And we're really hoping to make new highs here and go for these previous highs and beyond. ISRG is another one that's been consolidating nicely after a very, very strong earnings beat. Now, we haven't had much action here, but I do expect that if we can break out, we're going to these highs up above 600 and hopefully beyond. Again, like Shoals Technologies, we have had 3 days of very tight price action on low volume. It's exactly what we want to see in normal conditions before a stock breaks higher. We've basically exhausted overhead supply. Nobody's really selling, and everyone's starting to kind of buy, and that pressure is released so the stock can hopefully push higher aggressively. And that's what we're trying to catch here. If we can get up to 594, half of this position will come off and we'll trail the rest for free. Twilio is another one I really like, but might take some time and patience. I'll bump it out to the weekly chart just to see how beautiful this consolidation is. But it's another COVID darling that just came crashing down and consolidated for a year down here before forming this kind of triangle pattern that we're currently trying to break out of now. We also have this resistance, which was the high from July 2019. It capped price action here in January 2025. And my bet is that if we go up there again, we're not stopping. So this is one I really like, but might take some patience as it tries to break higher. But the trend looks very constructive. These moving averages are starting to turn up, and we're seeing strong volume on green days, which is always a good indication that the stock is being accumulated. We just need to work through this overhead resistance. And we currently have a stop loss here right on the 20-day exponential moving average, which is moving higher. So hoping that gives us some cushion this week. And we don't have a profit target in for half quite yet, but I will be monitoring this throughout the week and sharing that in real time. The next position is NXT, which is also in the solar sector. I'll show you TAN real quick, which is this big solar ETF. You can see how this looks very similar to Shoals in terms of came up, came down, and is consolidating and hopefully going higher here through the previous local high we had in November. Back to NXT, we have this beautiful base. Now this one has been taking its sweet time, but we do have this beautiful base that's been forming on the 4-hour chart and this resistance zone that we tried to get above on December 22nd and kind of failed. But again, like the last couple, you see this extremely tight price action for the last 3 days. Now, I'm hoping, of course, that this breaks higher. We do have a lot of wicks. It does seem like there's a lot of buying pressure here. You see green candles here on the volume on most of the big days instead of red. It does feel like it's being accumulated. The trend is higher. You're seeing these moving averages point up and curl higher. So everything looks aligned here for higher prices. We're just staying patient, right? Hopefully this is the week we get that breakout. And I'm looking to take half of the position off here at 104, 105 area, and then again, trail the rest. That's the name of the game for me. If I can get half off and keep trailing and give myself a free ride, I'm going to do that every time. AbbVie, another one in the healthcare space, much like Merck, but hasn't made those new local highs. If you recall Merck, we already made new local highs from the November 25th peak, but AbbVie has not yet. Here's the same November 25th, 24th peak. We haven't gotten above that yet. I think it's only a matter of time before we do. We have worked our way through the 228 zone, which was kind of, again, when we start looking at support and resistance and how that's been capped, we couldn't get through it here. We couldn't get through it here, but it did provide support right here before it finally did break down. So now that we're through that level, we need to see more aggressive buying to push us higher. Now, I don't put a lot of confidence in diagonal trend lines as, great support or resistance. I'd mostly be looking at this zone here, which hopefully won't be too hard to work through, considering our first profit target is 240, but we do need to get through there, obviously, to make new all-time highs here at 245. So I like the look of this one. Again, I think it's going to take some patience. I'll get rid of that diagonal in general, but it has the potential to really roll up and out. And you can see all of our buy points. I bought this in 3 chunks on Friday. Again, that's all shared live in Friday's video. Take a look if you want to see my thought process as that's developing, because I think it's super helpful if you're trying to learn how to swing trade and learn my style. So AbbVie is a newer position, and hopefully that gives us some progress this week. SanDisk. SNDK is a position I initiated on December 23rd with just 500 shares. Nothing crazy, because this is a stock that it's high beta. It'll move quite a bit, and I don't want to have a large position and expose myself to a lot of, volatile price action. So I dumbed down the size a bit. We didn't get the best entry up here at, it was 242.76. Again, this is a wash sale situation where I did trade the stock within a 30-day window or previously, and so they've adjusted my cost basis higher a bit. But you can see we also missed the initial price target here twice by just, under a dollar or two, which is tough, but it happens all the time. So we're staying patient, and hopefully we're going to see this continue to push higher. If we go to the daily chart, and I'll go to a chart here without my executions on it so you can see this a little bit clearer, you can see how we have worked through this 234 zone, which again, you can see time and time again how we were support, and then after we broke down, the same level acted as resistance here, resistance here, resistance here, and finally getting through, right? Finally getting through, and then we see the same level once again acting as support. So it's a key level. And now that we're above it, the hope is we're going to new all-time highs up in the 285 zone. Would love to see us get there. Of course, I would love to see us hit that first profit target initially, and then we can trail and see how far this thing can take us. Now, this is a very volatile stock. I said that already. It's also been in a parabolic move. So it can be a little tough to buy these things feeling that we're already at nosebleed levels. And if you're going to play in stocks like this, I highly recommend A, decrease your size. Always, always trade with a stop loss, and be okay with losing the amount that you set your stop loss as. We can always put a stop loss in and tell ourselves we have a stop in and everything's going to be okay. But if you have not internalized the potential loss and accepted that, it's going to be very hard to keep your stop loss where it's supposed to be. I don't have that problem. I'm okay taking the loss. And that's why I'm okay buying a parabolic kind of move like this on a volatile stock. Hopefully it works out, but if it doesn't, it's just a numbers game. We're just cycling inventory and looking for the next trade. Speaking of the next trade, Reddit is one I have struggled with. This is one where I did violate my rules, and I've been very clear about that in previous videos. I initially bought in this zone, expecting that we were going to push higher. I had a stop loss here, and then I moved it down like a sucker, like an amateur, like a rookie. And I hate myself for it, but I'm not going to continue to beat myself up about it. I'm either going to let this move higher and take some off soon, or I'm going to harvest the tax loss for this before the end of the year and be done with it. Let it get out of my mental space. So it's hard for me to recommend this stock, or I'm not recommending any stocks, but it's hard for me to advocate for a strong setup here because I'm just not seeing clearly on Reddit right now. I'm hopeful that we do roll up and go higher, but I am not expecting it to work out. I know I screwed up. I know I shouldn't be in this trade, and that's it. I'm owning it, right? It's still on the books, unfortunately, even though I've had some chances to take it off. It's been a mistake. Moving on. Google has been a new position for me recently. We bought on Tuesday last week a couple times. So we have 1,500 shares here, and we're playing this on the lower time frames, expecting it to roll up. Notice how we came through the 200 period moving average. That started sloping higher. The 50, the 100 also sloping higher. So this is kind of a bread and butter trade setup for me. And if you look at the daily, we're in a very strong uptrend. And let me pull that up over here to get rid of my execution marks. A very, very strong uptrend. I was trading it here when we came up through this resistance line. I talked about that on Twitter, but I wasn't doing the YouTube channel or the videos yet. I really think we've made the turn here now, and we're going to start heading higher. So you see, we've had some tight price action in the last 2 trading days. This was really the key on December 19th. Strong volume coming through, very strong candle. And the next day, gap up, came down, but closed right where we gapped to on the day, and another strong day. So a more ideal entry, if you were trading this on the daily, would have been the close of this Friday candle. And now you would just be trailing basically a free trade. But hopefully this tight consolidation on look at how low this volume is. Yes, it was a holiday week, but still incredibly low volume. And hopefully that's a sign that we're about to push higher. So I like Google here still. I'm very happy with the position. I'm looking to, again, take half off here at 319.31. My risk was very small here at 311. So again, this is the wash trade. I told you I was in it earlier. We're averaged at 314. So I'm basically risking about $3 of risk on 1,500 shares. That's only $4,500. And this would be 2x that initial risk amount. So we'll take off half there and hopefully trail the rest if everything goes as planned. CCJ is another newer position I initiated on Tuesday. I was hoping this would break up, but it hasn't yet. And I was showing this kind of formation here, or this consolidation with these arrows. And you can see that on Tuesday's video if you want to go back and check it out. But basically what we're looking at here is this consolidation structure that we're hoping starts to do something like this. And what you want to see is these corrections become shallower on declining volume. And hopefully that's what we'll get here. Who knows? All we can do is put ourselves in these positions time and time again, trust the math, and know that more than half of the time, these work out in our favor. That's what I'm in the business of doing. Not trying to predict the future, just trying to get us in the position where the numbers work in our favor. And you can see the daily chart. Again, let me go to this. The daily chart is a little bit sloppy, but it does seem like we're trying to break above this 96 zone. The 10 and 20 day exponential moving averages are crossing up over the 50, and hopefully we can get enough pressure on here to push through and go for new highs. I don't love this setup right now, but it is interesting enough for me to initiate a position. Next on the list is NTR. This is a big ag company, fertilizer, potash, things like that. Had this great base, and then a bull flag, and then a breakout. And I got involved on the pullback here in this zone on the 15th. So I've had this position for almost 2 weeks now. And it's been constructive. It just hasn't been crazy. This is one I would consider adding to potentially this week, but I'd like to see it set up in kind of, I'd like to see this 10 and 20 day exponential, or 10 and 20, 15 minute EMAs get above the 50 and 100 and see this kind of start turning up, maybe pressuring the highs here. And that's where I would think about adding. But overall, when you look at the daily chart, it is really beautiful. Breaking out the 10 day, the 20 day EMAs moving nicely higher, the 50 rolling up in green, the 100 in yellow, and the 200 still very strong, and what I call purely aligned to the upside. So I do expect this one to keep rolling, but we'll probably have to stay patient, and that's fine. Our first profit target is 66, and above that, I think this has a lot of room to run. We might see some potential resistance here up at 72, and then through that, keep going, hopefully. But we will play that as we get there. AppLovin has been a little bit frustrating for me. Initially got invested here. I want to say it was in this zone. I don't know exactly when. Again, they remove these execution marks after a certain amount of time, and I don't know what that is. But we had a run up here, came back down, back up, and it's been a little bit sloppy. We're getting closer to that first profit target, but it's hard to ignore the daily trend. This is really kind of broken out of consolidation and trying to push higher to new all-time highs. It's been a very strong stock for a long time, and I'm hoping to just kind of clip those and keep riding it. So one I still like, but again, we've had to be patient with. And I think that's a theme right now this time of year. You have to be patient. The end of December, or even December in general, is quieter. People are leaving the office for vacation and to be with family. And so you're just not getting big moves like you have been before in previous months. Palantir has been extremely tough. We got involved here on the break of this bull flag and literally came within pennies of hitting our initial target. Looked like it was trying again here on Friday, but didn't have the juice to go. And now looks kind of gross. So we'll see if we can get a reversal here. Not one I would be playing unless we can get back above, basically 198, 200. But at that point, I'm already involved and I would be trailing. So it's been sloppy, not something I'd be entering if, I was not already in a position. So just kind of sitting on that. So those are the trades I have on right now going into the week. Now, I've also put together a very short list of stocks that I am looking to potentially initiate new positions. And this short list will change literally every day. I go through 200 to 300 stocks. I look at how they're setting up. I look at the daily trend and the 15-minute and the hour charts and try to find the best potential setups in that. So I'm going to hit a few of those right now for you. Taiwan Semiconductor has been an extremely strong uptrend. I like that we're going for these new highs here. I think it's only a matter of time before it breaks out, and it's just about finding a good entry. Now on the 15-minute chart, we have rolled up with the 200 moving average higher, 50, 100, etc. Everything looks up and to the right in that purely aligned formation that I like to talk about. So it's just about finding the right entry point. And I'm not quite ready to do that yet, but it is on my list for potential add. And if I do so, I'll be sharing it in real time like I always do. CVS, talk about boring stocks, but kind of in that healthcare niche and looking very interesting on the daily. We've got this bull flag kind of look here that seems to be playing out. The daily trend is purely aligned with the 10 and 20 day moving averages kind of rolling up. And if you drop down to the 15-minute chart, same thing. That 200 period moving average, we're through that. It's starting to hopefully roll up. The 50 and 100 definitely there. So I want to give a little bit more time to this setup, but it looks very, very interesting. And this has been on my radar for the last week or two. IBM also looks interesting. You're going to notice this all the time. I'm looking for that roll up. I call it the turn on the 15-minute chart. The 200 period hasn't quite started moving up yet. So not something I would get involved in quite yet, but it's getting close. And the daily has been in a great trend. So that aligns with our thinking. We want to be in stocks almost always that are trending up on the daily chart and then look for an entry on the lower time frame charts to mitigate our risk. But B, try to time this so that we're not sitting in this position for months and months before it actually starts moving. So another one we'll be keeping our eye on this week. Microsoft. Also, this one's a little bit different because it's not in an uptrend on the daily chart. I would call this a neutral trend where we are below the 50, we're below the 100, but still above the 200-day moving average. Now, you can completely avoid neutral trends if you want, and I think that's great for beginners. Sometimes I'll play them because there is still potential for these to move higher. Microsoft, I really like setting up on the lower time frame. If we look at this, all we really want to see is a move above 489. And we can see that we're making higher lows, consistently higher lows into that zone. And we're seeing them on the jumps, volume on the jumps, and then contraction in volume when it's not doing anything. So we really want to see if it can get above 489, but we still want to see it kind of above this 492 zone. So 489 to 492, if this starts to move above that, I think there's a lot of room to move up to 510 pretty easily. So definitely on my radar to buy, even though it is not in a daily uptrend. And you can see I've assigned it a yellow flag to show that neutral state on the daily chart. Net is a similar kind of action. You can see the 15-minute rolling up. We've got this clear line of resistance at 203-ish and a series of higher lows with the 200 moving average moving up and the others kind of pointing in that 45-degree purely aligned formation. However, when you bump out to the daily chart, we are not in what I would call a technical bull trend. We're in a neutral trend, meaning we're stuck below the 50 and the 100 period moving averages, but still above the 200. Now, again, that doesn't mean this isn't viable. It just means you need to understand the time frame you're trading and what you're trying to get out of the trade. If we got involved in this, we'd be managing the trade from a lower time frame and not expecting a huge run. We look to cut this on any weakness. Rocket Mortgages is another one, very similar, but a little bit different in terms of we're above the 50 and 100-day moving averages here, but the 50-day, the green one, is below the 100. So we're still not quite in what I would call a technical uptrend. It's a lot different than what we were seeing back here. when the 50 was well stacked higher above the 100 and the 200. That said, we are looking at the 15-minute and we're seeing that roll up happen. I'd really like to see it start to give above these recent highs and continue rolling up above, first we'd want to see above here, 1964-ish. Then we want to tackle this previous high. And then of course, the last highs up here at 2060-ish. If we could do that, we're looking at challenging these next highs and likely flipping the daily chart to a bullish trend. Next, Tesla. I was in Tesla last week or in the last couple weeks, and you can see here, I took profits at 477.46. We did well with this trade. That said, it started looking weak on the lower timeframes, and I personally need to get better about this. If my entry criteria is on a 15-minute chart, part of that criteria, or a big part of that criteria, are the moving averages rotating higher, I should be getting out anytime that changes. In fact, I might consider a short on this, because if you were to invert this chart, and we'll do that here, what does this look like? This looks like a very buyable formation on the 15-minute with the 200, the 100, and the 50 moving up, price moving through, and just putting our stop here and letting it ride, right? But this is not an inverse chart. This is a downtrend or a developing downtrend. And while the daily chart is absolutely in an uptrend, and we don't really want to make a habit of shorting strong daily uptrends, it could be worth a position purely for a hedge or a counter trend trade. If markets were to get weaker, this looks like it would be something that would give up more ground than something that's rotating up like Google, for example. So it is on my list because I would consider a short here. And I know that might not be popular. Tesla's a very popular name, but that's just kind of my stance as a swing trader. I'm not looking to hold something for the long term. I'm looking to put odds in my favor in the short term and take little chunks out of the trend, whichever way that may be. Array Technologies is a really nice looking solar setup. Now it's a little bit jumpy, but you can see this thing has been basing and we're now challenging highs in the 240-ish zone, which kind of go way back here, to April 2024. So if we can get above this, and it certainly looks like we're trying to, strong volume on these recent days here, I think it's very viable. And if we go down to the 15-minute, we are pressuring that quite a lot. You can see all these strong volume candles on big momentum higher. So I like this. That said, we have exposure with NXT, SHLS to this sector already. So I'd have to be careful about how much I'm buying here, or at least make sure my stop is very, very tight. I don't want too much exposure to one theme or one sector. Edwards Life Sciences Corporation. I have no idea what these guys even do, to be quite honest, but I like the chart. I like how this 15-minute is rolling up very nicely in a very controlled fashion. We need to get it above this 87 mark and then obviously 88. But if you bump this out to the daily chart, this is probably an imminent breakout. We've got the 10 and 20 day moving averages in position to roll up nicely. The 50, the 100, the 200, it's all purely aligned to the upside. And we're just knocking on this ceiling, and I expect it to break right through. Now, it's not a super volatile stock, which would play nicely if you're a more conservative investor or trader. I might look at taking a position here this week simply because it's a great looking setup and it's a name that's not really correlated with a lot of my other positions. So I like it for those reasons. And let's see, two more. Cybin caught my interest this weekend. It's not ready yet. I'll be very upfront about that, but it is looking interesting. I like to see these. This reminds me a lot of mRNA right now. This has been on my watch list for literally months. I've been waiting for this push through the 200 and then a pullback and maybe something a little more like this. So we get this push, right? We get a pullback wherever it might stop. Maybe it comes close to the 200 and then we get another push and then a lower pullback and then maybe another one and a shallower, and then we get the kind of move. That's my hope, at least. We'll see if that actually plays out, but it is on my watch list for that specific reason. I'm trying to keep tabs on something and watch it develop. Now, let's get back to Cybin's going through the same thing. So what we need to see here, at a minimum, the 200-day moving average is finally turning up. It tried to do it back here in July, failed. And so if this can roll up and the 50 and can get through the 200, it starts to get very interesting to me, because look at how hard this thing has been beaten down. And if it can catch fire, it could be a huge potential move. So it's on my watch list, but it is very, very unlikely that I take a trade on this coming week. But we are seeing that 15-minute structure. Look where it finally got through, had some consolidation, pushed sideways, pushed sideways, pushed. So it's looking very constructive right now. However, I think it needs more time to develop. And finally, BABA. I made a lot of money on BABA earlier this year, and it was great for me, but it also just has not been able to get going. So I'm a little bit hesitant with this stock. It needs to prove itself to me. We are getting a surprising amount of volume for a holiday Friday. So that was interesting to see, but we really want to see this whole wedge type formation finally break. All right, that's the goal. This needs to break higher. And we might be getting close to that finally, okay? And when we go back down to the 15-minute, we are getting that roll up. We are getting the turn on the 15-minute. However, up here it was very messy. I do expect to see some selling pressure in this area where a lot of people, myself included, were trying to get involved in this area. And, I stopped myself out. A lot of those people probably didn't and are going to be looking to get out at break even. So I do expect some resistance in this zone and let it just further develop. I don't think this one's going to start screaming and getting away from us, real quickly. And I really don't like the look of K-Web right now. BABA's a big component of that. If you look at this on the daily, everything's rotating lower. So it's hard for me to have a lot of confidence in BABA and things like Baidu, which looks much stronger in my opinion than BABA. And maybe that should be on the list here. Kind of, not quite. But I'm taking these setups, these Chinese names, with a grain of salt and not getting involved, but I'm keeping them on my radar because I am open-minded. And if the setup's there, I'm just going to take it. So that's it for today. I think I managed to do this in about 40 minutes, which is a huge improvement. And I'm trying to go quick while also providing a lot of information and my thoughts on things. So again, please like, subscribe, do all those things. I see it all. I reply to all the comments and it motivates me to keep doing these videos. And I will see you tomorrow for the first trading day of the week. All right, gang, take care.